Welcome to another episode of our podcast, Life Without Purse. Today, our special guest is Perry Woodin, who is the founder and CEO of NODE40, and they are a crypto accounting data company. Perry, welcome to the podcast.
Marcin, thank you for having me. My kids are excited to hear I was on Life Without Pairs. They didn't know what that meant, so I had to explain it to them, but they thought it was really cool.
That's awesome. That's the right way to educate them, so that they will be asking questions, why? But we'll explain them later. But happy 2023, and I think that's the year when crypto accounting became sexy.
Oh, no doubt. This is definitely the year. We've been in this for a long time, so we've seen all the years where we thought it was going to become sexy, but now we're starting to hear it from the big boys.
And you really started preparing for that year and for what's coming in terms of regulation, compliance, and also accounting way before, like 7 years before. So
yeah.
NODE40 is, and why people really need to hear about it. Who really is, Perry Woodin, how you guys met with Sean, the co-founder. Maybe you can give us a little origin story here.
Sure. Yeah, I think the history is really important, especially in this space. So, you mentioned my co-founder, Sean Ryan. So both Sean and I met each other as engineers, consulting engineers. And we got along really well. I recognized Sean as just this brilliant engineering mind, somebody that can solve really any problem you put in front of him. Doesn't matter if it's a computer science problem or just a traditional engineering problem. He's just good at tearing things apart. So way back in 2014, we started toying around with the idea of getting into the blockchain space. And in March of 2015, we started our first company in the space. And it was the first iteration of NODE40, but it was focused on infrastructure. So running infrastructure for incentivized blockchains. We were really the first staking company in the space. And again, this was really early on. You could collateralize some of the tokens you had, and then you could start to get some yield from that. And we were running the nodes that would be necessary to do that. In mid 2015, we started to question what our income was. Like we were getting paid in crypto. So if you're getting paid exclusively in crypto and then you're cashing that out occasionally to pay your vendors, you may not be able to grasp what your books look like. And that became something that we knew we had to deal with towards the end of the year, because in the US, at least, we had to deal with potential tax liability, tax strategy. So we had this problem for the business that we had to solve. And looking around at the space, there wasn't anybody that could produce an audit trail that made us as engineers feel comfortable with reporting what we were doing to the revenue bureaus. So wrote an internal application that calculated all of our transaction activity, really detailed stuff, like really complex audit trails. And we fell in love with that problem. So while we were in the infrastructure space, the more interesting problem to us was how do you turn these this complex transaction data into information that a financial professional can either understand or provide guidance on? And that was the genesis for what we do today. But I mentioned we started in 2015. That was way too early to push a product like this onto the market. So we noodled on the problem. The space continued to evolve, became much more complicated. And in 2018, that's when we really started to see, I think this crypto blockchain stuff is really going to make it. So let's think about pursuing transaction analysis, because that's what we love to do. So that's what led us to where we are today.
So thank you for the origin story, and you guys are the OGs together with Sean. You mentioned 2015. I didn't even hear about this space in 2015.
Yeah, no, right. Like if you were in the space in 2015, you were probably in it a few years earlier, just tinkering. So we're now at a phase. I mean, there's just the big celebration of Hal Finney running the Bitcoin nodes. It's been around for a while, and we'll run into people who are like, yeah, I've been in this half a decade. Well, that's 5 years. got you beat by a little bit. But yeah, I mean, I love this space, and I've been in it for multiple bear markets, multiple bull markets, and we're not going anywhere.
So before we go into NODE40, also I wanted to touch on what I kind of started off with, which is crypto accounting becoming sexy, because a lot of people don't even know what is my cost basis, you know, like companies that are putting Bitcoin or other, you know, crypto on their balance sheet or doing, you know, different transactions, maybe high frequency traders. They very often, they have no clue about this sort of dashboard.
What's your basis? That is something you should be able to get at a moment's notice. And it's really important for individuals. It's really important for businesses. You should always know what the acquisition cost of your assets, because that's going to impact any disposition. So anytime you've sold it or moved it and purchased goods or services, you really need to know what that basis was. And that's going to have an effect on everything you do. I mean, we saw Michael Saylor actually sell some tokens, which he said he wasn't going to do, right? But it's because he knew what the basis was of what he bought. And so it made financial sense for him to execute on certain trades to offset, I don't know, gains in other parts of his business.
And you mentioned also that as you guys started in 2015, you guys really evolved and pivoted. Maybe you can talk about this sort of path and now getting to this point, how and why, you know, like, I mean, how and why now NODE40 is so important and what big problem is it solving?
So there was the first big pivot for me and Sean, which was moving from infrastructure to transaction analytics. And then there were lots of little pivots that were really focused around market opportunities, but there were really no major pivots around our core focus. So remember, we're both engineers, so our focus has been very consistent around how do you translate these transactions into something that other people can understand. So really, as engineers, having blinders on to solve that problem. And as the space evolves, the pivots come into place when you start to recognize who is now in the market. And that has changed over time. So we've had to say, let's look at retail users. Is that somebody we want to service? Probably not, because they don't care so much about an audit trail and they want to pay, you know, nothing for the information. DeFi, that came, you know, roaring in 2020, and we started to see traditional financial institutions start to dabble in the space, very compliance focused. So we said, now we can really service you because you need what we have. And then finally, we're starting to see the folks that are servicing these institutions. So think about top 20 accounting firms. They are helping these institutions take certain positions around the activity that they're interacting with. And they need all of that data at their fingertips, and they don't want somebody telling them what they should or should not be doing. They want information that allows them to make a determination and then back that up.
So you guys really provide data analytics to big institutions and biggest accounting firms that are helping the institutions. So institutions, they come to the biggest accounting firms. They say, hey, we have this and that position. We have exposure to crypto, and they have no clue about, you know, what's their position and what's their data, and they cannot make really good decisions because of that.
Yeah, so we're really a bridge between the technology layer and then the service layer. So if you think about the accounting firms are really a fantastic service layer. They know what their clients need. They understand the rules and regulations within the space. Even admitting that there are a lack of regulations, they will know in what lane they can direct their clients. So what they need is somebody that can bridge that gap, and that's us. So we are the technology arm. We help translate the stuff so that they can make sense of it.
So if we take Ferrari as sort of as a picture to imagine where NODE40 fits, the Ferrari would be the dashboard, and NODE40 would be the dashboard on the Ferrari, showing, you know, the driver
Yeah. Oh, that's a great analogy. So you don't really need to know if you're driving a Ferrari and maybe you don't know that much about them. You don't really need to know what kind of output they have. You need to make sure that you're not redlining it, and you want to understand how fast am I driving. So we're translating all the complicated electrical components and components of the engine that are coming together to provide the power you need to move this luxury car forward. And so NODE40 is really that interface.
Mm-hmm. And you guys, you mentioned both yourself and Sean, you guys come from engineering background. And because of that, when you look at how you do it, because all the engineers, they always ask the question how, and you want to go into details. So I'm gonna kind of drill a little bit more. How specifically do you guys do that? Maybe you can explain NODE40 balance and other upcoming services.
Yeah. So the how is at the root. You want all of the information. So what's available to me? And what's available to me comes from various sources. So let's break that down. When you're interacting with cryptocurrencies, there are a number of ways you can do that. So you could be somebody that is just doing it on exchanges, like you're trading one token for another, or you're trading tokens for dollars. You're doing that on exchanges. The exchanges are keeping the data, and then we can extract that data from them. Not terribly difficult. Though we see that most people who are on exchanges are on more than one exchange. So what happens when you move from one exchange to the other? There is no sharing of information between these exchanges. So as you move tokens from one source to another, this is in centralized exchanges, you lose the cost basis. So that's a problem. Now, when it comes to sources that are on-chain, that's where things get really complicated because the amount of data available there is staggering. So for a single transaction, you're looking at multiple components, you're looking at multiple chains, and you have to make sense of that. So we store all of it, we aggregate it, we normalize it. That means we put it into essentially buckets where you can start to make sense of what's going on. And then we translate that and categorize it to the point where you now have a dashboard or reports that. Yeah,
totally. That makes sense. So we're not going to be drilling into specifically what you guys do, what's the secret sauce in there. That's not the podcast for that. But I would love to maybe in the future go deeper because again, you guys are engineers and you're the perfect people to actually talk about it rather than someone from business or sales.
Yeah. Pull me out of that because we can go deep fast and I don't want to get us stuck there.
We want to give people the Ferrari and then hey, just drive it and then look at your dashboard. Make sure that
put it
you're
in manual mode.
Yes, right. Exactly. So let me transition now into rapid fire segment.
Sure.
So I'm going to be asking very precise questions and then, feel free to take as much time as you want to answer them. Obviously, with everything that's been happening in the crypto space, why can I meaning an institution or the biggest accounting firm, why should I trust you with my client's portfolio data?
Yeah. Well, I guess the answer is you shouldn't trust. So, and that we took to heart as engineers. What we do is we provide enough data that you can verify yourself. That's twofold. One is, where did you get the data from? I want to verify that the data you're presenting to me actually came from a source that I can validate against. And then the other is, does the math work? And so we provide enough information that you can do the math yourself. You could back into the numbers that we're providing. It's not just top-level aggregate numbers. It's down to the nitty-gritty details, where you can do the sum in an Excel sheet and come up with the same numbers that we did. So that is you're verifying, and that's what brings the trust.
Got you. Who is the ideal client for NODE40?
The ideal client, they're really the firms who have decided that they want to take a position in this space. So they understand it enough that they can talk to their clients about how they're going to direct them, but then they're looking for a tool like NODE40 that can that can give them the information they need to make those decisions. So the ideal client is really the firm who's interacting with other institutions or individuals.
Like, for example, the biggest accounting firms?
Yeah, like the top accounting firms, correct.
Right. What about high frequency traders? I know you guys handle a lot of transactions, and I have some other questions for that, but maybe you can elaborate on that segment as well.
Yeah, high frequency trading is a really complex problem to solve because you now have this massive volume of transactions. And when I talk massive volume, I mean, 1 billion transactions a year. So we have built out an entire high frequency trading desk, and all they do is they work on the problem that is specific to high frequency traders. So a high frequency trader can't look at a user interface. If you've got 1 billion transactions, it's pointless. You can't get enough information on there. So you really have to build out a series of reports that allows them to drill in as needed, and it becomes a war chest of data that they can use when the inevitable audits come.
Can you give any specific examples of maybe some client, obviously not disclosing the names or anything like that? So people can understand the vastness of, because you mentioned 1 billion. It's not 1 million, it's 1 billion transactions.
Right, 1 billion transactions. Yeah, so that's a lot of transactions, and it would be across many sources. And we talked a little earlier on about movement of an asset from one source to the other. On top of that, with the high frequency traders, they're interacting on exchanges where there's high liquidity, and not all of these exchanges are great in terms of the data that they're providing. So you can imagine somebody sees an opportunity as a high frequency trader on an exchange where they know that the data they're going to get back isn't that great, but the potential to make profit is massive. So they're going to go there. What that means is at the end of the day, when they want to look at a report about what they did, we need to make sure that we can calculate the transactions and daily balances based upon the information we get from the exchange, and 10% of that could be missing. So what do? We work directly with the high frequency traders to make those determinations.
All right. Thank you for addressing that. Now, we talked about the major accounting firms, biggest 50, 100 accounting firms, the biggest 20 accounting firms. What are those firms doing to address digital assets?
There's a lot of aspects within the large firms. So there's wealth management. So if you have a client who has crypto, it's pretty much a black hole right now. You don't know what their position is. This is going back to basis. If you've got a wealth management division, you've got a client with a substantial position in crypto, you want to be able to advise across their entire portfolio, not just their crypto portfolio, but their entire portfolio. So wealth management is a big aspect. It ties into tax strategy. The other is assurance. And so that comes down to audit. When you are going to do audit, and we've seen failures in the space recently with that, and we've seen some of the big firms really pull out of that, and then other firms see now an opportunity to really jump into assurance. Well, what you need in assurance is tools that are going to provide all the data, everything. And then the necessary reporting that if you ever had a question about a specific transaction, the components of that transaction at a date time, you could go in and show that what you are reporting matches what happened in the real world. And then finally, the easiest thing, which is I think where a lot of firms start, is in tax liability. So with all of this data, one of the easiest things you can do with it is help your clients understand what their tax liability is. That is sort of table stakes. You have to be able to do that. You have to be able to do that really well, and you have to be able to back the positions that you're taking, because that protects your clients in a space that is not, there's just not enough guidance. So protecting your clients, that's the tax liability. Assurance, you're preparing them for review or audit. And then finally, when you have those high net worth individuals, wealth management.
Mm-hmm. So you obviously mentioned about liability assurance management in terms of the biggest accounting firms, but what does the relationship between NODE40, so you guys, and those accounting firms look like? What do you provide to them?
Yeah, again, we're that bridge. So if you really focus in on the accounting firms being the service provider, they're the ones who are interacting with the end client, like the high net worth individuals. What NODE40 does is we're then their technology arm. So if a new protocol comes online, we make sure that we can support that so that the firm can then support their clients. So we're dealing with the technology aspect, but more than that, because we're into the technology, everybody at the company, they're really subject matter experts on technologically what's happening with a transaction. We can help educate the folks at the firms about, well, what happened from a technological standpoint, because it may differ substantially from what your intent was, and we want you to be able to apply your intent to it. So how are we going to wrangle that? So there is a lot of back and forth. We're not just providing a black box product that the firms use. We're providing a tool, and then folks to back up that tool.
Mm-hmm. And going back, you mentioned about a client with 1 billion transactions. Is there a limit to those transactions?
There a limit? There,
or maybe the better question would be, how many transactions can NODE40 manage? And is there a limit really to those transactions?
Yeah, so I would say that there is not a limit from our perspective. So again, remember, we're like engineering focused. So building a scalable product that can handle anything you can throw at it. So having that capability to scale up. The limit is actually on the ability of high frequency traders to trade. Like, you can't go much above 1 billion transactions a year. It's just not feasible. There isn't the liquidity available. There isn't the ability for exchanges to support that level of activity themselves. So we could see some fluctuation around that $1 billion mark, but I don't see much of it. I think a lot of limitations in some of the other platforms, they start to choke maybe around 50, 100,000 transactions. That has never been something we've been worried about.
That's not a Ferrari. We're talking about
That's not a Ferrari, right?
Exactly. So I have a few more rapid questions, and then I'll let you go because I know you're a busy and awesome CEO, by the way, who I had a chance to work alongside with at the Consensus last year, and I hope we're gonna do more conferences.
That was so much fun. Yeah,
that's right. But going to the next rapid fire question: what kind of reports can I generate with NODE40? So I meaning an institution, the biggest accounting firm for my clients, especially, or I meaning high frequency trader.
Let's take it from firm's perspective. So a firm brings in their client, they load up their sources. The first thing they want to see is a balance sheet. So given, you would see that from your broker or from your bank, given an opening date and a closing date, what's your opening position, what's your closing position, do those balance, right? You're never going to get a bank statement or a brokerage statement where that doesn't balance. You also should not get that in crypto. It should always balance. That is often enough to give firms the confidence that the rest of the reports that we provide are accurate to the point where they don't need to do a deep dive. Now, if you do need to do a deep dive because maybe you have a client interacting in some interesting protocols, or you want to take not so conservative positions, we provide lots of other reports from quantity and USD reconciliations per source and per token, down to gain-loss reporting on unrealized and realized gains, closing position reports, and then finally the one that usually has firms agape is the transaction level details. So of all the reports that we've seen, it's all backed up by the transaction level details. We have a report that shows every single transaction, and then if you were to put it in an Excel file, it just scrolls to the right seemingly forever because the amount of context there is.
Yeah, I mean, there's so much data that NODE40 is really analyzing that you would not be able to do with any other tool out there. And especially if you're an accounting firm, this is just a Ferrari. Like imagine having so much money, and you just want to buy a fancy car. That fancy car is the Ferrari, but that's your favorite car, and you know that you have to have it. So that's kind of like, that's how I visualize NODE40.
Yeah, we like to talk about fancy cars, especially in the crypto space. And another analogy that's always really worked well for me is I had the opportunity to drive a Lamborghini once, and that was a real blast. And I see that all these people that are these high net worth individuals or these high frequency traders or even the DeFi degens, they're getting into the space and they don't really know what they're doing. So when I first got into a Lamborghini, I did not know what I was doing. The person who owned the car said, "Hey, you gotta come out of the parking lot at an angle because you don't want to scrape the undercarriage." Well, NODE40 is providing that level of detail about, hey, here's what you did. Here's how you operate in this interesting new world of cryptocurrency, DeFi, NFTs, CeFi, whatever's coming next. We've got the information you need to be a good driver.
Yeah, and we give you all the data. We give you education. And then
That's
so
right.
you can just enjoy the ride. Awesome. Let's. You mentioned about degens and DeFi transactions. So that's a perfect segue to another point. Can NODE40 actually handle DeFi transactions, NFTs, staking? And you mentioned you guys actually originated in the staking, so I would imagine the answer is yes. Yeah. And then also utilize cold wallets as well as exchanges.
So all of that stuff. And our approach on the DeFi front has always been support the entire chain. So we're not working to support individual protocols. Our work is to support the information that you can get off the chain, and that's very robust. What you can do once you have that information is then you can start to specifically look at interesting protocols and say, is there a position we want to take here to categorize things in a way that may not be reflected on chain? Again, this goes to the intent of the end user. And so, yeah, we support all of those things. And I am often surprised when, well, I'll take NFTs, for example. When people first started to ask, do you support NFTs? I didn't know the answer. So I plugged in an address that had NFTs on it. And I'm like, oh, there they are. Like the engineers were already pulling in that data. It's just a matter of how do you want this presented to you so you can make sense of it.
Awesome. I have some other questions that you already kind of answered in terms of calculating gain or loss when disposing or selling crypto and actually, going into fiat. Do you want to elaborate more on that, or you think that's covered sufficiently?
Yeah, I think we've covered it sufficiently. It's just you need something where it's obvious that cost basis is being carried and that it is being carried on the lot level. And we didn't really talk about that, but lot level identification is really critical to accurate reporting.
Maybe you can explain what's lot level. Maybe a lot of people, they don't know.
Yeah, so lot level, so if you think about when you're selling stocks and bonds, you're selling specific tax lots, right? You're disposing of tax lots. And in crypto, each one of these tax lots will have its own basis. So you could be in an interesting scenario where you have a transaction. Say let's say I send you some Bitcoin. I send you one Bitcoin, and that one Bitcoin is going to be made up of lots and lots, or let's say many, many, many lots, tax lots. And in Bitcoin, they're UTXOs. And each one of those UTXOs or tax lots has its own basis. So when I send you that one Bitcoin, I could have a gain on that transaction, a loss on that transaction. Those gains and losses could be long-term and or short-term. So one single transaction could cover all of those different types of gains and losses.
Awesome. Perry, thank you for your time and appreciate you. And also thank you for, making crypto accounting data sexy by giving examples of Lamborghinis, meaning, Ferraris. I think that's very graphical and easy enough for everybody to understand. Any final thoughts?
No, I just want to, express again my appreciation for having us on, and love chatting with you.
Awesome. Thank you very much, Perry. Appreciate you, and till the next time.